Sure, Malkani guys, Elia, Ubotso. We are back, new week, new video. Today I'm touching on something interesting, as always. So since it's January, uh, again, I've decided to touch on vehicle financing. Because I believe most of the people now have started new jobs, or you've gotten promotions and you are looking into financing your first car, or you're looking into trading in your new car, your old car for a new car. So yes, this video is basically just gonna touch on everything around the financing of your car. So with no wasting time, let's get right into it. So vehicle financing pretty much just it's just you getting money from the bank or elsewhere to buy your car because you don't have money. So you borrow this money. So there's two options when you want to finance your car. There's what we call direct lending, when you get a loan from the bank, and then you go and buy the car from the dealership, and then you'll be paying back that loan plus finance charge, which is your interest. Or there's dealership financing. So you find that some dealerships, they have an in-house financing where you just you get the car, then you just be paying the monthly installment plus the interest directly to the dealership. Or the dealership sometimes can take that contract that you entered in with them and sell it to like the bank or credit unions or financing company. Then you will be paying now the money over to that bank or the credit union. So basically, those are the two options that you get when you are financing a car. So now, later we are gonna go a layer deeper into the financing. So you find that when you are buying a car, you find that or the car's advertised as you have to put it down. Maybe you have to put down a 10% deposit, and then you probably, let me say a rough figure, maybe you'll be paying 7,000 a month, and this car probably costs example maybe 200,000 or 100. Okay, let's say 150,000. So now you get a loan for 150,000 from the bank, and now you get your new car which costs 150, and you have to pay interest on top of that. So if you look at these two things, the car and the loan is higher than your car value, and we call this negative equity. So you need to be smart, and at least at the beginning or when you get your car, you must not be in negative equity. So at least have a deposit which is almost equivalent to your interest payments, your finance charge on top of, which is on the money added on top of your loan. So let's say if that dealership is asking for 10% deposit, at least have 30 to 35% deposit. So in that breath, um, you kill most of your interest, and as you go on, maybe at the end of year one of financing your car, at least you have brought the value of the loan in the same line as your vehicle. Because what happens is, if uh, the value of your loan is higher than your vehicle, and then you default, you end up not paying, and then your financer comes and repossess your car. They go and auction it for the value of the car, and they settle only the portion that is equivalent to the value of the car. So which means there's still an amount left. So you'll find that even when your car has been taken and sold, you still owe the bank. So you don't want to end up in all that crap. And then the other thing is, when you are buying a car for the first time, you find out that sometimes you don't have a deposit, and then the dealership can offer you what they call a balloon payment. So a balloon payment is, they take the deposit and put it at the end of your financing period. So let's say your financing period is 36 months. So they say, okay, 10%, this 10% deposit, you're going to pay it in the 36 months with the last installment. So let's say your monthly installment is 7,000 a month. So in your last month of pay, you're gonna pay 37,000. Rough figures again. So you must get clever with this. When you have a balloon payment, try at least in year 2, start saving up for your balloon payment. Because what happens is some people, they actually forget that they have a balloon payment to pay at the end of the car financing. And when you don't pay the balloon payment, there's no negotiation. They come and take the car. They come and take the car. And imagine you paid for 5 years and you have this 30,000 that's remaining and you can't source it from anywhere. They take it. Then they can go and sell the car or whatever they can go do with the car. So please get smart with this. And just for those that want to refinance or to trade in their old cars, again, we go back to the thing of negative equity, which is when your loan amount is more than the value of your car. At least try, by the time when you want to refinance or to trade in your car, try to make sure that your loan your car value and your loan value is in line, or your loan value is lower than the value of the car. So then you don't have to incur extra costs on your new purchase. Because what happens is, if your loan amount is higher than the value of the car, when you are trading in your car, they will take they will add this money to your new vehicle. So let's say, for example, again, you are paying 7,000 for your current car, and then the new model comes out. Maybe they are asking, maybe for the new car is 8.5. So now, if your vehicle, if your current car is lower, the current car's value is lower than the loan, you might find out that this 8.5 is going to go as far as maybe even 10.5 or 11,000. You see that? So you don't want to end up in situations like that. So please get smart with us. Always have a huge deposit down. Don't rush. Don't rush into purchasing cars with no deposit. Always have a huge deposit down. And the other thing is, which is quite a bit difficult, but there's something called credit insurance. So credit insurance is you insure your loan. So in the case of when you probably lose your income or you die, that insurance will be able to settle that remaining amount on your loan. So then your car doesn't have to get repossessed. So yeah, sorry guys, this video is quite long. I'm sorry I came this far, but anyways, I hope you found it informative. Must have a good week ahead. Elia Ubozo. Please, if you found this video informative, give it some thumbs up and also subscribe, man, for more content. For more content coming. Cheers.